Okay, next up we have Rural Funds Group trading under the ASX code RFF with a market capitalisation of 820 million. They are the responsible entity and manager of RFF. RFM is an agricultural fund and asset manager established in 1997. The management team includes specialist fund managers, finance professionals, horticulturists, agronomists, and other agricultural managers. Joining us today is Rural Funds General Manager James Powell. James, thanks for your time, and over to you.
Thank you, Paul. I might just pause on this slide for a moment and maybe just provide a bit of background. So the Rural Funds Group, ASX code RFF, is the listed entity. It's an agricultural property trust, and that's the entity which I will be speaking about today. As you can see by the logo that we have associated with that entity, 2024 represents RFF's 10th year of listing. So we listed this fund in 2014. We being the external manager, which is Rural Funds Management. So that's the logo in the top right of screen. And as Paul has explained, Rural Funds Management is an agricultural fund manager, an asset manager. RFM, as we abbreviate it, has been in operation for over 25 years and in fact was established in 1997, making it one of Australia's oldest agricultural fund managers. The next slide details a disclaimer as well as a glossary of terms. So this presentation, and in fact all of the slides from this presentation, have been derived from our recent half-year results presentation. And so if there's any acronyms on the slides or ones that I use, then you can refer back to this glossary in order to receive an explanation of that acronym or that term. And the reason that I highlight that this is a selection of slides from the results presentation is that this material is all already available on the ASX when it was disclosed last month. So I've structured today's presentation so that we spend a few moments initially on an overview of the RFF portfolio, as well as the strategy, before moving into some discussion around the accounts which we've just released. So as I mentioned at the outset, the Rural Funds Group is an agricultural property trust or a real estate investment trust, or as we tend to abbreviate it, a REIT. It is Australia's only ASX-listed diversified agricultural REIT, and it has approximately $1.9 billion within it. You can get a sense of the assets locations and the key sectors by looking at the map and the pie charts on this slide. So we've colour-coded for various agricultural commodities locations of assets. You can see the legend in roughly the centre of screen. Cattle assets are denoted in blue, almonds are in a dark green, macadamias are in a light green, cropping properties are grey, and vineyards are red. As shown on the right-hand side of the slide, the assets are well diversified, particularly across cattle, almonds, macadamias, and cropping sectors. And as I'll explain when we go through the presentation, we expect that macadamia segment will continue to grow as we're currently in the process of developing assets in that particular commodity. A couple of key metrics of RFF, so its weighted average lease expiry is 12.8 years, and the adjusted net asset value per unit is just over $3. The portfolio has gearing of 36%, and there are some 67 properties which you can see detailed on the map. As you can see, they're largely on the eastern seaboard. We have a strategy to diversify climatically within RFF, and typically when I'm presenting the assets locations, I'll put it on a map which shows the different rainfall zones across Australia. It can become a little bit overwhelming if put adjacent to other different pie charts and so forth. So I haven't used that colour coding in this map, but one of our key strategies is to diversify our assets, not just geographically, but actually climatically. Some of the other elements of our strategy are outlined on the left of this page, and that's really just to generate income and capital growth from developing and then leasing out, crucially, agricultural assets. And from that, we generate cash, which we distribute to investors, and we have a target annual distribution growth rate of 4% per annum. Rural funds management really uses two key strategies to improve assets' values as well as their income earning potential. And that's to develop the productivity of assets or to convert them to higher and better use. So productivity and higher, better use developments are two of the strategies which you will see being deployed within the portfolio, and we'll touch on shortly. We diversify, as I mentioned earlier, by climatic zone as well as by agricultural sector. And then rural funds management, so the external manager, we preference sectors where Australia has a competitive advantage. And so that means that Australia can be a low-cost producer and therefore can compete globally in the production of beef and almonds and macadamias and cotton, etc. We think that's really important in terms of the viability of the agricultural sectors in which we lease assets. We also have a preference for sectors where rural funds management has direct operating experience within. Again, being an important component of being a landlord is your insights into the strengths and the weaknesses and the opportunities within various commodities. Moving on to the next page, I've detailed the lessees of the portfolio. So we do often get the question, you're leasing $1.9 billion worth of agricultural assets or thereabouts, and you've got assets in various targeted commodities that have attributes which you're seeking, namely competitive. Australia can compete globally in terms of cost of production. But what are the businesses that you're leasing them to, or in fact, are they more individuals? And so this page really steps out by percentage of FY24 forecast income, the types of lessees that we are leasing these agricultural assets to. And as you can see, they're overwhelmingly listed or corporate agricultural counterparts. So our largest counterpart is Olam. They're a subsidiary of Olam Group, who are listed on the Singapore Exchange, and we lease a number of almond orchards to them. The Rohatyn Group, in joint venture with a global institutional investor, has recently entered into macadamia development lease. JBS, which are one of the world's largest beef processors, lease various cattle assets, namely feedlots. Select Harvest, who are ASX listed, lease almond orchards. The CAM Agricultural Group, a large privately owned cattle operator, lease assets in that sector, as do Stoneaxe, an institutionally owned cattle operator. Our vineyards are all leased to ASX listed Treasury Wine Estates, and AACo, one of Australia's largest listed landowners, leases a number of cattle properties. The next page shows the weighted average expiry of these leases. And so the majority of our leases go for a WALE of over 10 years, and therefore the WALE is currently just under 13 years. And that really gives us predictability around the income generation within the portfolio. Now, our leases are structured so that they have annual escalators, and I've detailed those escalators on the right of this slide. As you can see, the majority are CPI or CPI linked, and then we also have fixed components. A number of those escalators also have a market rent review, and so that's a really important mechanism by which we monetize underlying asset growth that may occur, for example, through productivity improvements or through higher and better use conversion. That's a bit of a background of the fund. Looking now at the half-year results, I've started with an earnings and balance sheet summary, and I'll just call out some of the key highlights of the results. Firstly, we've seen an increase in property revenue occur, and that's because we're currently rolling out the development of 3,000 hectares of macadamia orchards. And the way those leases are struck is that as the Rural Funds Group deploys capital for the development of those assets, rent is accrued on it. So just moving on to the next slide, please. In addition to a property revenue increase of about 12%, we had an earnings increase of 20%. And so that includes the property revenue increase as well as in underlying valuation movements. And I'll detail that in a little bit more on the next slide. We saw an increase in our total asset base as well, and that was due to revaluations as well as the development capex that we've spent. But we've seen a very marginal increase in our gearing, and that's primarily because as the asset values have gone up and our capex have gone up, there has been a portion of that which has offset each other. So the next slide just details the three sectors in which we had valuations arranged in the last half. We have a policy to have all of our assets independently revalued at least once every 2 years. In the last half, we had a quarter of the portfolio revalued, predominantly in the cattle and macadamia sector, and those values went up on average above 15%. And that led to or contributed to an increase in our adjusted net asset value per unit of about 5% to the current 3.07 it is currently. And finally, just looking at the capital management of the group, I've detailed on this page a number of the interest rate instruments we have to manage our interest rate expense exposure. Just moving on to the next page. And you'll see that we have in FY24, 25, 26, quite a significant amount of hedges, which we'd actually entered into in prior periods. So the cost of those hedges is actually quite low, providing the Rural Funds Group some good protection in terms of interest rate expense. So I've touched on the overview of RFF and then a financial results update. And as I mentioned, more information is available via ASX disclosures, which were made late in February. But now I'll just move into some of the portfolio updates of key activities that are occurring within the Rural Funds Group. If we could please just move to the next page. So quite excitingly, we've announced that some transactions are currently in documentation phase for the partial sale and lease of 2 cropping properties within the portfolio. And so this is an example of productivity improvement strategies, where if you look at the image in circa centre of screen, this is a cropping property called Mainland. What we've done is we've developed a water storage and then expanded irrigation area. In this case, we're looking at an irrigated crop, which is cotton, and these properties will primarily focus on cotton production. In doing that strategy, what we've done is we've lifted the productivity of that asset, and quite commonly what we're doing is seeking to incrementally develop assets prior to leasing them out under long-term leasing arrangements. So we're currently documenting a transaction whereby we will lease Mainland and Bamba Plains. But in addition to that, we'll also sell down 50% of these asset values. And what that does is that will provide capital for the Rural Funds Group to deploy on other development activities that are occurring within the portfolio. And I will just note that this transaction is not complete and is currently in documentation phase, as noted in the footnote on screen. So just moving on to the next page, what we can see here is one of the higher and better use developments that is occurring within the portfolio, and this is with respect to macadamias. So in January 2023, a 40-year lease commenced for the development of macadamias, and we believe that the majority, if not all of those developments for 3,000 hectares will be complete by the end of this calendar year. The pictures on screen just show the various stages of development, from ground preparation, then installing the irrigation infrastructure, planting the trees, and then ongoing costs for the first 5 years for the establishment of these orchards. What's really important is that as capital is deployed by the Rural Funds Group to develop these assets, rent is earned on that capital. So that is what has been contributing to the increase in property revenue, for example, that I just outlined on the earlier slides. And we would expect to see that there'll be ongoing contributions to property revenue as these developments are completed and are ongoing over the next year in terms of plantings, and then smaller amounts of capex for the establishment phases of those orchards as well. Another sort of reason why we have deployed this particular strategy, being a higher and better asset conversion strategy, is that we believe that we can actually develop these assets at a cost lower than their prevailing market value. So converting like a sugarcane property, which is what you're seeing here, to a higher value horticultural crop enables not only an increase in this farm value, which has potential benefits for the Rural Funds Group, but also leads to higher income generation. Basically, macadamias are more profitable than the commodity that was previously grown. And so by converting into a macadamia orchard, it enables the Rural Funds Group to charge a higher amount of rent and therefore achieving higher earnings for our investors. Just moving on to the next page, please, which just provides a recap of the results. Some of the highlights were that we saw quite resilient asset values, whereby the assets that we had revalued went up circa 15% on average. We're in the documentation phase of a transaction whereby assets which were identified for their productivity improvement potential, those developments are now nearing completion, and we're documenting a transaction which would see those assets leased out, as well as a partial sell down, which will realise some capital for the Rural Funds Group to continue to fund the aforementioned macadamia developments. We expect those macadamia developments will provide ongoing property revenue growth because, as I mentioned, the way that lease is structured is that as the Rural Funds Group spends money on developing the assets, it earns extra income. Attributes of the Rural Funds Group that I outlined at the start are also presented on page. However, Paul, I think that's probably sufficient for me, so happy to go to questions.
Thanks, James. As always, plenty of questions here. The first one of the main features which came out prior to the release of the December half-year result was a positive increase in valuations of around 72.2 million, which was in direct contrast to the downward movement in valuations of the traditional A-REITs exposed to commercial, industrial and retail assets. Do you see that trend continuing over the full 23-24 year?
We're quite positive towards the prospect of potential further increases to asset values, and the reason for that is those two strategies that I mentioned. So we are developing assets to a higher and better use, and we're also improving the productivity of assets, be it expanding the number of bales of cotton that you can produce from a cropping property, or the kilos of beef that you can produce from a cattle property. And it's through those two activities where we think there'll be additional value for our investors.
Another question here. When RFM leased out the properties, was there a restriction on what sort of farming would be done, or can the lease be used? Can the leasee use the properties however they want and produce any crops they want?
So in respect to when we lease out a property, it's for an intended commodity. So if we're leasing a cattle property, it's for that purpose. However, within the cropping segment, and we really focus on cotton properties there will be other rotation crops that will be planted, but really the most profitable crop that usually that an operator can produce is cotton, and that's because of Australia's competitive advantage within that sector in terms of producing a very high quality product where there's significant demand globally.
And another one here, RFF is targeting the sale of 50% interest in mainland Mbamba to an institutional investor who will lease 100% of the assets. Is this type of recycling likely to be duplicated with macadamia assets?
We believe it could be. Our main objective is to lease out assets, but where we're leasing them to a financial type of lessee, then there has been a desire to to have an ownership in that underlying asset as well. And so that's something which we've considered, and we feel it is in the unit holders' interest because it does create an alignment, and as well provides capital re-injected back into RFF, which can be used for other developments, which will accrue additional income for our investors.
Gotcha. There's a question here, James, asking if you could talk a little bit more about how the rental income is protected in the case of droughts or floods.
Our leases are structured so that the lessees pay the rent regardless of the operating results of the particular property, and we're quite comfortable with those arrangements because the nature of our lessees are that they're typically corporates. They typically are well diversified in terms of their operations. They're only leasing a certain part of their portfolio from the Rural Funds Group, and they also have multiple ways in which they can access additional capital.
Gotcha. And just one last one here. There's been a fair bit of focus on cost of living pressures, particularly with regard to food prices. Any comment on RFF's perspective as they relate to RFF's cattle and feedlot assets?
Yeah, we have seen the beef price over the last few years reach all-time highs, and then last calendar year it had quite a spectacular fall. And really, what that was driven by was the prospect for drier seasons, and then cattle farmers were destocking because they were concerned that they may not have sufficient grass on their properties to feed their cattle. This is really largely doesn't impact the income earnings of the Rural Funds Group because of the lease structures that I outlined previously. And in addition to that, what we've seen is the cattle price came off circa 70%, but then it's recovered probably 3/4 of that from November last year. So Rural Funds Group isn't exposed. However, the cattle price has certainly settled lower than its previous highs. So hopefully we all can benefit from some lower meat prices at our local supermarket.
Yeah, I have to say, when the cattle prices fell by 70%, certainly the steak I was buying at my local butcher didn't fall by 70%. James, as always, absolute pleasure to have you on today, and many thanks for your time.
Thank you, Paul.